Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the reasoning behind the moves today so that we can better understand tomorrow. Today, we're taking a look at gold futures. Now, gold opened up consecutively another huge gap higher. We saw this yesterday where, we opened up with a massive gap up, and then we went into a range for a while. And then today, we opened up with another big gap higher, but this time around, we saw that same range start, but with a lot of clues to the bull side. Now, when we first opened up, if we zoom in a little bit closer, we can see that the buyers, they didn't do so hot on that first candle. Now, generally speaking, when you get a big gap up, a lot of times you'll see a quick little reversal down, and then buyers will swoop in and slam the market up and close near its highs. That's what we saw yesterday. We're probably going to see the same thing today. So we start off weak bullishness into more weak bullishness. Notably, not only are we at resistance at 1301.1, but we're also at the big round number of 1300, another big thing to keep an eye on. We see the sellers try to come in after trapping the buyers. The first strong bull candle that the buyers get, they're immediately trapped and whipped out of the move. That's not a good sign. So we know that a lot of buyers are going to be stuck right there, right? So when buyers start coming back in, it goes back up to their original entry point, tests it to the tick, and immediately fades back down again. We know that not only are the buyers stuck, but they couldn't even get out of break even before the market turned back down again. So when we followed up with this small little bitty bear candle right here, a relatively innocuous candle, all things considered, when you look at it in context, it makes a lot of sense to become a seller under it, looking for a nice big move compared to the risk to the downside. And that allowed for a 2-to-1 type trade to the downside for sellers to take it back to the lows. We push down into the lows and we find a bunch of stalling, right? They try breaking underneath the lows, they fail with the doji, they close underneath it and then twin reversal their way back out of it. So obviously there is a boatload of support coming in at these lows, and that allows us to become buyers on the next attempt to break out that fails. They try to break out of the area, they completely fail, turn back around into a strong bullish momentum move. Same thing that happened up here. They turn down once and twice, they turn up once and twice. Very kind of equal types of moves for a beautiful buy move back up towards the channel highs. Now, in this type of scenario, given the context, really we're starting to see this as a range type day. We've cycled off the highs, failed, cycled down to the lows, are failing, we're probably going back up to the highs, and that allows for a beautiful risk reward looking back to the highs and maybe even a little bit further. We form a bear channel coming its way down here. The sellers attempt to come back lower, obviously very weak, and then it's followed up with a massive bull breakout move that allows buyers to jump right back in and buy it right back up on a huge move, knowing that this is the type of day where you have a big gap up, morning reversal pullback, and a slam right back up in the continuation direction, allowing the buyers to just slam dunk this move back up. Now, with this massive amount of bullishness, right, we had 1, 2, 3, 4, 5, 6, 7, 8 consecutive bull candles back to back to back to back. Not a single one has even broken the prior candle's low, right? Very aggressively bullish move to the upside. We have to assume that the first big pullback that we get, whether it's to the moving average, whether it's to a swing level, whatever, it's very likely going to get bought. And the big reason is there are a lot of buyers that maybe didn't catch this move higher. Maybe they didn't buy right here or buy right here, and they missed it. They're looking for a way in, and the closest they're going to find is a pullback, and that's exactly what we had right here. Big exhaustive type pullback to the downside, and a beautiful reason to become a buyer once again to drive the market back up towards the highs. Now, we didn't quite get up towards the highs as of yet. We found a little bit of a pause at the exhaustive move down, very common. Bad bear follow through, more bad bear follow through, and more bad bear follow through. Say that 5 times fast. And then we get a big trap into a strong bull move. You're very likely going to find the buyers going into lunchtime trying to get back towards that high of day. So just a beautiful example of looking at what's happening in the grand scheme of things, taking a look at the psychology of the markets and being empathetic to both sides of trade to understand how to approach it. And if you approached it with that in mind, you did very well today. So it's an awesome day of trading. Lots to learn from today if you had a little bit of trouble, but otherwise that's going to do it for this one. So hopefully you learned something, hopefully you found it interesting, and we'll see you next time.